Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hey everyone, looking at SPY, daily, weekly, shorter term time frame. So we had the indecision candlestick yesterday, and today the bears took over, filling the gap to the downside. That was our target as soon as we broke the low of yesterday, 214.48, and the bears were kind enough to break that low of the day first thing to give us the direction, and I'll show you on the 5-minute time frame how that played out. So from here, we've got support of the 10-day moving average, which is going to be in the upper 213.70s. We do still have that bullish MACD cross to keep an eye on, and it filled the gap to the upside, or to the downside, so now we'll see if the bulls show back up and try and get back up towards the high of yesterday, 215.32. Keeping in mind SPY, and again, I watch SPX here on the weekly, rejecting from that 10-week moving average resistance 5 of the last 6 weeks if we cannot recover over 21.52 over the next 3 days. It certainly could be fairly easy for the bulls to regain that level and see a strong end of this week. We do have some big earnings coming out. We'll see if Apple reaction weighs on the market. So keeping an eye on this weekly 10-week moving average, as that's going to be key as we approach Thursday and Friday, watching how this weekly candlestick shapes up. So looking at SPY on the 5-minute time frame, like I said, we had a very clear indication that the bears were in control to start today, and it started with a dump right before the bell. So a big time pullback, breaking to the lows of pre-market, and then also, like I said, we broke the low of yesterday first thing on the second candlestick. So that right there gave us a lower low to watch on the daily, and that had us not really believing this bull move because we had very key resistance to be watching, the 100 and 200 period 5-minute resistances, which were at 215 even and 214.93, and then combine that with the hourly moving average resistance, the 20 period, that was up at 214.90. So hourly and 5-minute moving average resistances rejecting the price. We pulled back on the hourly, filled the gap, held the 100 and 200 period moving average supports. Then we saw a little bounce that rejected from the 8-period exponential resistance, which we also rejected from here at the end of the day. And we're clearly battling to hold these support levels. So if we break below them to start tomorrow, pre-market will be very telling where we are situated with regards to these moving averages. And obviously, if we lose these supports, we'll be looking for further downside. And looking back at the past 5 days, this is the first time we've tested them after the 200 period hourly with some tough resistance. Now we are testing it and trying to hold that level. Exponential resistance, tightening range is forming, and again, we should see a clear break pre-market and know which direction to be looking before the bell rings like we were today. So I appreciate you watching. We'll check back in tomorrow. We'll see how these big name earnings goes, and I will see you then. Thanks for watching.